Investing is what builds your wealth. And the way that it works is you're going to take the money that you don't spend and you're going to buy this thing, this asset, this investment for the purposes of making money. When you buy clothes, you buy them so you can clothe yourself. When you buy an asset, you buy it so you can make money. And when people think about what do I buy, most people think, well, what stock should I buy? Or what should I trade? Or should I buy this trading card or this crypto? But that's not the way that we're going to be talking about investing. I want to talk about real fundamental, real investing that can build you real wealth over the long term if you do it right. And there are 4 questions you have to ask if you want to do this. Number 1, what is your strategy? Number 2, what is your goal? Number 3, what asset are you going to invest in? And number 4, what is the analysis to actually decide if this is a good investment or not? So let me break this down. Starting with the strategy. There are 2 strategies that are generally talk about. One is active investing, one is passive investing. This is not trading. I'm not a trader. I'm not a flipper. To me, that's gambling. That's not the game that I play. Investing is where you buy an investment and you own it for the long term. The long term is at the very least 1 year, but we're talking generally many years. And so when we talk about active investing, this is now where you're managing your investments yourself. So you're investing in individual stocks, and now you're managing your stock portfolio. Or you're investing in individual real estate. You don't have to manage it yourself. You can hire a property manager, but you're finding the properties yourself and you're buying these properties yourself. Passive investing is now where you have somebody or something managing the investment for you. So when I talk about passive investing in the stock market, this means investing your money into an ETF, a mutual fund, an index fund, a fund that is a group of companies that's managed by a computer or a person. That way you don't have to manage the portfolio. Passive investing into real estate is you're investing into a fund that's managed by somebody else. I'm not talking about having it managed by somebody else. I'm talking about investing into somebody else's deal. They're doing all the work. You just give them the money and it's completely passive for you. And you got to decide what is a better investment for you based off of where you in your life. Some people love the idea of keeping up with companies. Some people like the idea of dealing with property managers and finding properties. If that's you, well then you can look at active investing. If you say, I don't have any time, I don't really care about reading financial statements, I just want to put my money to work and not have to worry about it, then passive investing is a better option for you. And some of you are going to be like me where you kind of do both. I do active investing. I actively invest in stocks, I actively invest in real estate, but I also passively invest in stocks as well. So once you figure out what type of strategy that you want, the next thing you have to think about is your goal, which means how do you want to get paid? Would you rather get paid with cash flow? Or would you rather get paid with appreciation? Would you rather see the price of your investment rise? Now again, this is going to go back to what is more important for you. For me, and I got to give you the disclaimer, because I'm just a random guy on YouTube. Investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But I like investing for cash flow, and I don't recommend what I do to anybody else, but for me, I like cash flow because it's a game where I can work to stack the cash flow. Every month, my goal is to increase my cash flow. Every year, I want to have more cash flow than the previous year. How do I generate my cash flow? Well, I'll talk about it in the assets, but now I can get paid without having to sell my investments, and my goal is just to be able to live off of the cash flow, because now I know if I spend all my cash flow this month, I'm going to get another cash flow check next month. Some people don't like that. The reason why some people don't like that is because when you generate cash flow, you have to worry about taxes. And when you generate cash flow, you generally don't see the same growth in the asset price, because that means the asset is spitting out the money instead of using the money to grow the value of the asset. See, if a stock goes up in value from $100 to $10,000, you don't pay any taxes until you sell. But if you get paid $10, you have to think about taxes. So you gotta figure out what's right for you. For me, the bulk of my investments, my total investment portfolio, are cash flow producing. The third thing you wanna think about now is which asset do you want to invest in? And the 2 big assets that have built more wealth than anything else over the last century in the United States are stocks and real estate. Start there. Don't start with the speculative assets if you're just starting your investment journey. Worry about the speculative assets later after you have built a decent amount of wealth for yourself. Then you can think about the speculative assets. For me, stocks and real estate out of my passive investments outside of my own business make up about 80% of my investment portfolio. About 18% is speculative, and about 2% is physical gold. But I didn't start investing into startups or cryptocurrency until I had built a solid foundation with my stocks and real estate. Now, my largest investment out of everything is my own business, Briefs Media, but the non-my business assets, stocks and real estate, are the biggest two. Then I have some speculative and then some physical gold. And out of that, the majority of my investments are for cash flow. Now, for those of you that are investors and you want to stay up to date on what's happening in the financial markets, Market Briefs is a free newsletter that I created in my company, Briefs Media, where we publish this breakdown of what's happening in the financial markets every morning. We break down what's happening in things like stocks and the real estate market and the crypto market and the global economy and our own economy into a fun, witty, and easy to read newsletter. You can read it in less than 5 minutes every morning, and it's completely free. So if you have not joined Market Briefs yet, I got the link to how you can join down in the description below. And then once you understand if you want to invest in stocks or real estate, now you can start doing the analysis. This is where, if you're investing in stocks, you can do your analysis depending on what you're investing in. If you're investing in individual companies, you want to take a look at, is this company overvalued or undervalued? How do you do that? You look at financial statements. Look at the income statement, the balance sheet, and the cash flow statement. The income statement is the profit and loss statement. The balance sheet is the asset and liability statement. And the cash flow statement shows you how cash flowed through the company. Every company that trades on the stock market is required to publish these three things, and you can learn how to do these things. You can learn how to read these things. There's a bunch of videos on YouTube on it. There are classes, there are books on this. You can start learning about how to do that. If you're investing in ETFs and index funds and mutual funds, now you can take a look at which institution created these funds. Is this institution reputable, or is it a random guy or girl out of their garage? Then you could take a look at what types of assets are they investing in. Are they investing in the S&P 500, or are they investing in emerging markets around the world? What is the assets under management? Is there only $10,000 of money invested into this fund, or are there $10 billion of assets invested into this fund? And what types of things are they actually investing inside of this fund? For example, you're going to see that there's multiple S&P 500 funds out there. Some are going to have more ownership of Tesla than Microsoft. Some are going to have less of one or the other. And you can start to take a look at these things. That's the type of analysis you want to be doing when you're now digging deeper into your actual investments. Same with real estate. When you're investing in real estate, you want to take a look at the numbers. You want to underwrite the deal. For me, I like to look for a 7% cash on cash return. If I invest $100,000 of my own cash, I want to see $7,000 of cash flow, profit, hit my bank account after paying all expenses over the year, and that's without me having to sell my investment. Now you're spending less money than what you make, and now you take this extra money and you're going to invest it. You follow the 4-step analysis that we just talked about, and you find ways to start investing this money. You can make it automatic, you can invest this money yourself, but now you're putting this money to work. And then what's going to happen to every single person who does this is they say, wow, I like this financial education thing, I like this investing thing, how can I do more of it? Well, you can either spend less or you can earn more. There's a limit to how much you can spend less. I mean, there's a limit to how many pennies you can squeeze out of your paycheck, but there's no limit to how much you can earn. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.